Hey guys, I wanted to take this week and talk about a very hot topic in the real estate industry right now, and that is the rise of interest rates. What's going on nationwide right now, over the last couple months, we've seen a massive rise in interest rates, probably across the board, a full 1% rise in rates. Now, I want to talk about how this affects you as a buyer and even a seller in this market, because this will affect you dramatically when you're looking at purchasing a home, whether that's this year or even going into next year. So what does the rise on interest rates do to your buying power? So when we see a full, let's say 1% rise in interest rates, this tacks off 10% of your purchasing power as a buyer. So let's say you were approved at $300,000 and now your interest rate goes up a full 1%. Now your approval, if nothing else has changed on your loan, went from $300,000 now down to $270,000. So this does affect buyers across the board, no matter what loan program you're looking at getting approved on. This does start eating away at your buying power. So I want to talk about what you can do as a buyer to help prepare yourself for a market where it's still ultra competitive and interest rates are on the rise, what you can do to benefit your family and help you prepare for this real estate market throughout this year. So how can you as a buyer prepare yourself for a market where interest rates are on the rise? So when us as lenders approve you on a specific loan program, there are certain debt to income requirements that we have to abide by to approve you as a buyer for that specific program. So a good way to compensate for the rise in interest rates is to lower your debt to income. A good way to do this is to focus on paying off debt across the board on yours and your family's monthly debt that's revolving and that's on your credit report. That's a huge way to help kind of compensate for the rise in interest rates. Another one is to maybe work on getting your credit score higher. So if your credit score, let's say, is 700 and now interest rates go up, a good way to compensate for the rise in interest rates to get a better rate would be to maybe work on getting your credit score to, let's say, 740 or even 760. And then another great way is to just save up more money across the board to help put down as a larger down payment on your house, because that will just help lower your monthly payment. These are three easy ways that I see of helping kind of compensate for a rise in interest rates, and it will definitely just help make your offer a lot more competitive when you're out there making offers in this current market. If you guys want to see kind of my prediction on what interest rates are going to look like for the rest of the year, please just comment below or shoot me a message, and I'd love to chat with you on my take on what I think is we're going to see in the industry throughout this whole year.